So you want to gift a property to your child. What are the tax implications of doing so? Check out this video as Louise and I discuss this very subject. There's a good question actually it's just come in from Naima, saying if I'm gifted a property legally via solicitors, yet they live in the property until they die, would I be able to get a mortgage on it in my own name, and would I have any tax implications?
Lovely question.
It's a great question. I think let's take this into two parts. Let's think about your parents first of all. What's happened here is that your parents have gifted you a property in order, and my belief is that in order to
it might not be parents. It doesn't really matter what connection they are to. It's just
I'm not finished.
Anywho.
Shall I get a cattle prod? Right.
Moving on.
Here we are. So get you a bit of a shock there. So my view is that parents have given over a property, like say ungifted, but they want to live with it till die. I'm going to give that scenario. If that's the case, then if it's parents, you do have to be wary of this because it's a gift with
reservation of benefit.
Right. What is that?
A GWROB is basically a method of a HMRC ensuring that inheritance tax is paid on the death estate of the individual still living in the property as though it was their own. The fact that it has physically been gifted to you legally, sadly, doesn't mean it moves from an inheritance tax perspective. In fact, HMRC, you might argue, are going to get two goes at the bow when it comes to inheritance tax, because they'll take it from the individual who was living in the property up until death when they pass on, sadly. And then when you pass on, they're going to take it again, aren't they? How lovely. So there are certain ways that you can mitigate and prevent that gift with reservation of benefit impacting you. But you need to go talk to a tax advisor. One of the most simplest ways, of course, is that individual no longer lives in that property. A second methodology might be that they pay you market rate rent to live in that property, which of course is going to generate rent income for you, which you're going to be taxed on, I appreciate. But if you want to be sure the gift with reservation of benefit impact doesn't hit you, you need to be thinking about these things and getting on with them.
Well, the other issue that I kind of think about is if it is parents, and I appreciate you saying it's not, but typically it is in this scenario. If the person that is gifted the property is no longer the owner, they are renting it. There is this issue of, well, if the property is then sold and there's capital gains tax to pay, you pay capital gains tax. And if you're not living in that property, then you don't get private residency relief, which means you pay capital gains tax on the uplift in value from the moment that the property is being gifted to you and the sales price. So you could be faced with, you thought you was getting away from inheritance tax, which with some very clever ways you could, but you could not only fall into the inheritance tax issue, but you could also fall into the capital gains tax issue. The last point you raised about, could you get a mortgage on it? Absolutely. There's no immediate tax implications on you, to be honest. And you can get a mortgage, so there's no issues from my side on that.
The only downside, of course, with getting a mortgage is if you're trying to get it, for example, as a buy-to-let, but you're not taking any rental income for that property, a mortgage company may choose not to lend to you because they don't see it as a viable methodology of being certain that they should get their money on a regular basis. You might give them all the comfort and assurances that they will, but if they can't see money coming in for what ultimately is an investment asset, they may say no.